Thank you, Madam Chair. Recently, I met with a group of Missouri bankers who came to my office after they had been to visit some CFPB representatives over at their building. And my bankers were talking about the things we're talking about this morning, QM rule. And they were told by the CFPB representatives that they were the 41st group to meet with them. And basically the gist of the conversation at the end of it was that, thank you for coming, but we know more about the effects of what's going to happen to the borrowers, the lenders, and the market than what you do, which is very concerning. So as a result of that, myself and a number of my Missouri delegation members wrote to the director, and he responded back to us. And Madam Chair, I'd like to have those two letters be made part of the record if I could.
Without objection.
And in the letter, the director indicates, he says, the Bureau shares your concern that regulation should not place unnecessary burdens on community banks. We recognize that with few exceptions, community banks and credit unions did not engage in the type of risky lending that led to the mortgage crisis. We're glad to hear that the director and see the director believes where the problem was, and hopefully he'll be willing to work with the committee and with any legislation that comes out of this as a result of our hearings today, because it's pretty obvious that there's a lot of negative that are occurring here. Along that line, I'd like to talk with the lenders here for a moment and sort of get some things clear. I think that Mr. Hardings and Mr. Wickenen and Mr. Spencer, I think you all three have mentioned this morning you are not going to be doing non-QM loans. Is that correct?
That's correct.
And Mr. Emerson, I didn't hear yours.
Yes, that's correct.
You're not going to be doing either Mr. Wickenen and Mr. Spencer. Is that correct?
That's correct.
Okay. Why not? Give me a real quick answer, because I've got this lady behind me here who's got a stopwatch on me, and you know, Ronald Reagan once said trust but verify, but since she's a really nice lady, I'm not going to verify. I'm going to trust her, but I do need to get quickly down here.
You know, as a community banker, we like to keep things simple to be able to afford to do it in our setting. I don't do higher price mortgages today for the same reason, because of the extra regulatory burden, the real fear of litigation and what that means long term. I know we talked about this is marking it today, and we will know 6 months from now or a year from now how it's really affected. But my concern is those consumers that want to buy a house between the next 6 months or the next year, because they're going to be harmed if we're not right about this regulation. And I believe that it will restrict credit. Mr.
Emerson, please.
I agree with Mr. Hardings, and I would add to that you know, by the very nature of QM, and that's the loan that you should be making, then there's a stigma that lending outside of QM is a loan that's not necessarily a good loan. You think about reputational risk, you think about repurchase risk, you think about the liability associated with that, and not to mention the fact, as I said in the testimony, there isn't a secondary market for a non-QM loan. So even if an independent mortgage bank wanted to originate that loan, which we don't want to, you couldn't, because there's no place to effectively sell that loan.
Mr. Wickenen.
I would agree with the gentleman previously that, you know, for us, the idea of charging more for a loan, wouldn't have charged differently from the previous year, is just something I can't stomach. Plus the fact that balancing my balance sheet, you know, with the ALM concerns and things of that nature, not being able to offload loans like I am today, it will impact. And according to my records for the last 3 years, if you just assume it's 11%, which may not seem a lot unless you're part of that 11%.
That's right. Mr. Spencer.
We need certainty. We need to know that we're within the bounds. And I can say that I'm sitting here representing 278 other affiliates who signed the letter in support of H.R. 3529. And we hope that we can get that certainty rather than trying to sort out uncertainty in the regulations as we've heard earlier.
Mr. Emerson, I think you hit on the point that I was trying to get to here that really is the heart of this matter, and that if it's a non-qualified loan, automatically there's a perception that there's a problem there, or there's something that doesn't fit into the box. And while before these rules, the bank had the flexibility to price a loan and look at the customer and be able to figure out what was best, not only for the customer, what would work for us for the bank. Now that flexibility has been taken away from them, and if it doesn't fit in the box, it opens you up to the opposite of what can happen here is that if it doesn't fit in now, all of a sudden it's a negative. There's an exposure, there's a risk there.
Right.
And My concern is, have any of you talked to your regulators about the problem that this could have when they come in and regulate you? This is the reason that you stepped back, because if a regulator comes in and sees you have a lot of non-QM loans, what are they going to do? They're going to assess, I assume, assess that against your capital, or have you have an extra fund to sort of go back against for these funds, or have you talked to them at all about this?
I have reached out to my regulators. It's kind of a wait and see today. I would like to comment something a little different. Person said, and he talked about secondary market and not being able to portfolio these loans. That's the advantage of allowing community banks to portfolio these non-QM loans and still have safe harbor. We would put these on our books if we had the safe harbor that went along with it. It's that litigation risk is what's preventing us from continuing to make non-QM loans.
We could do quick answers because the gentleman's time's expired.
I mean, I don't have anything to add to what we already added on my previous response.
Okay. Mr. Wickett, anything?